Hey guys, what's going on? It's Matt here with our weekly market. In a minute, let's jump into that mortgage-backed security graph. And you're going to see here, you guys know from left to right chronologically over time, or candlestick being a day in the market. Lower in the graph are those higher rates. Higher in the graph are those lower rates. And you're going to see here off to the right-hand side, we're coming off of our lower rates we were enjoying towards the tail end of last week. And it's really one thing pushing that, and that's going to be tariffs. So going through data-wise, economically, anything we get in terms of inflationary data, a lot of it's just going to be overshadowed by tariffs. It's really going to be driving our news, really going to be driving our interest rate, and really what bond traders are going to be looking at moving forward. That's why we've come off of that nice momentum swing we had. By all means, we are lower in rate, but we're not, we're kind of just moving sideways. I wouldn't call it a trend reversal yet. We're not really seeing us dump out and go higher in rate. But it's just a lot of headwinds because we're unsure of going back and forth, even as of like today and yesterday with the EU and putting tariffs on whiskey, and then we're putting tariffs on France. And at the end of the day, all of those things are inflationary to our economy in the short term. If you watched last week's Market in a Minute, I told you that's where our administration's okay with having a little bit of pain, i.e. inflation, in the short term. They're okay. These are all things the Fed's watching. And hey, should we start cutting rates when we might be getting into an inflationary period? It's not so good. So I want to caution, and I do get a lot of people asking me, the media overall generally be about 3 or 4 days later and kind of late to the party for what you're going to see in a lot of these reports. So we watch these, and I watch these live time, day by day, hour by hour, as I go through making locking decisions for clients and pricing loans. So that's where you be cautious. I want to note, if you see a lot of stuff in the media, they're really knee-jerky in reaction late. That we're seeing our rates actually creep the other way. I saw an article just this morning that rates have jumped to the lowest point they've been. Well, no, they haven't jumped to the lowest point. That was last week. So needless to say, be cautious of where you're getting your information from. If you really want to know where things are at, reach it, let me know. But overall, coming back, those interest rates are still sub 7s, but they're getting close back to 7% again, depending on your FICO score and your down payment, your closing costs, things like that. So we're definitely going to be anywhere between that 6.75, 7.25 range. Again, pretty stable, but still much lower than where we've been, a couple months ago. We were much higher than that. So good news, but again, those headwinds for those tariffs are really what's going to be driving us. We're going to have to watch those carefully and see what's going on. But, really low rates in the short term aren't something we're really going to be seeing here until we iron this out and see what goes on. All right, guys, enjoy the rest of your week. Have a good day. Talk to you soon.